stablecoin issuers, in addition to that, conduct sophisticated know your customer policies on all issuances and redemptions of those stablecoins. If you compare that to, for instance, physical cash, where no transactions effectively have know your customer or anti-money laundering or anti-financial crimes surveillance on them, already I think that the digital asset industry has set a pretty strong standard on that front.
Thank you. Madam Chair, I yield back.
The gentleman from Texas, Mr. Green, who is the chair of the Subcommittee on Oversight and Investigations, is now recognized for 5 minutes.
Thank you, Madam Chair, and I thank the witnesses for appearing as well. I trust that my volume is such that I'm being heard. If you can verify, I would greatly appreciate it.
We can hear you very well, Mr. Green.
Thank you very much, Madam Chair. In the last year, the digital asset market has exploded from about $500 billion to $3 trillion. And there's still extreme volatility, it seems, in this marketplace. Bitcoin, for example, lost half of its value over 2 days in March. And it rebounded, of course, later on. But there are many problems leading up to the global financial crisis that seem to be manifesting themselves in the market currently. Easy credit via margin investing, lack of transparency, the lack of transparency that I'd like to see, and adequate financial disclosure is not readily available. With the explosive growth in cryptocurrencies, at what point should we become concerned about the possibility of a bubble? At what point should we become concerned about the possibility of a bubble? Let's start, if we may, with Mr. Brian Brooks.
Well, thank you, Congressman Green. It's terrific to see you again, and I always find your questions extremely perceptive. What I would say about that question is a lot of the price volatility of cryptocurrency has to do with the early stage of the market and the thinly traded nature of the asset compared to, for example, U.S. real estate, global equities, or anything like that. I think the message I'd land with this committee in response to your question, however, is some of the things that make U.S. equity and debt markets more stable and less volatile have to do with the fact that there's a lot more price discovery in those areas. And what I mean by that is, you know, in the US, we have regulated equity mutual funds. We have derivatives products and futures products that allow the free trading on a 24/7 basis that provides the market with forecasts of what's happening in the ecosystem. In the world of crypto, the US hasn't responded by developing those tools for price discovery yet. And so the result in a relatively new, relatively thinly traded market is that one person unwinding their position can have a massive effect on the price. The last point I would just make very quickly is something like 80% of Bitcoin holders have never sold a Bitcoin. And so when you hear about a day when there was a giant price drop in Bitcoin, often it turns out that there was one or two large traders who were unwinding a leveraged position, and the vast majority of holders have enough confidence in it that they've literally never sold a unit of it. So I would argue we need more liquidity and more price discovery to tamp down volatility, not less.
Thank you. Let's go to Ms. Dixon, please.
Thank you for the question. I think from the standpoint of what's available in the market today, one of the things that we need to do better in this industry, and I think we're working in that direction, is much like the early days of the web, we need to focus on consumer-oriented products that have a lot of information about the challenges and also brings the person through from a literacy standpoint so they understand. You look at user experience, you look at UX design, all of these things are really, really important. And as we saw in the early days of the web, it happened. It came together. We became better at educating the audience about what's available and what's out there. The nice thing about blockchain is you have immutability. You have records that are out there that can't be changed. This information is already leveraged by Chainalysis, for example, in Elliptic, to demonstrate the different things that are happening on chain. And I think it allows us the opportunity to create a lot more foundational efforts with respect to user experience and focus on these consumer protection issues that you're talking about.
Mr. Samuel Bankman, if you would, please, like to hear from you.
Thank you for the question. One of the really innovative properties of cryptocurrency markets are 24/7 risk monitoring engines. We do not have overnight risk or weekend risk or holiday risk in the same way traditional assets do, which allow risk monitoring and de-risking of positions in real time to help mitigate volatility. We've been operating for a number of years with billions of dollars of open interest. We've never had customer losses, clawbacks, or anything like that, even going through periods of large movements in both directions. We store collateral from our users in a way which is not always done in the traditional financial ecosystem to backstop positions. And the last thing that I'll say is if you look at what precipitated some of the 2008 financial crisis, you saw a number of bilateral, bespoke, non-reported transactions happening between financial counterparties, which then got repackaged and re-leveraged again and again and again, such that no one knew how much risk was in that system until it all fell apart. If you compare that to what happens on FTX or other major cryptocurrency venues today, there's complete transparency about the full open interest. There's complete transparency about the positions that are held. There's a robust, consistent risk framework applied, and we're excited to work with the CFTC on our U.S. licensed and regulated venue to bring a lot of this to U.S. customers as well.
Thank you. My time has expired. Thank you, Madam Chair. I yield back.
You're welcome. The gentleman from Texas, Mr. Sessions, is now recognized for 5 minutes.
Madam Chairman, thank you very much, and to the panel, we appreciate this opportunity to hear from you. I think it's very important for us to hear from you. You're not the inventors necessarily, but you're the people that are going to make this work. I am tremendously impressed that from what I see, a lot of ingenuity, a lot of entrepreneurial spirit, and lots of advice about the future, about where this can grow is, I think, very important for us to listen to. I'm in favor of what you do. I'm not sure I want to go as far as you do on robustness of how much oversight you really want, because I think that in your perhaps emphasis, perhaps in your modeling, what makes you better is what you are, and I respect that. The question I would ask, and I don't know which one of you to ask this, so I would just say we're always interested in a traditional financial model of identifying risk. What is a risk? We get very little into value, but a lot into risk. And so I would ask you that the value of much of this could be compared to stocks, IPOs. When they first come out, they might come out and be worth this amount of money, and 1 year later they're worth a lesser amount of money. I'm more concerned with the term fraud, of the value that we're selling of all these different positions that could be held. What do you do to try and look at what might be fraud? I know there's been openness about, a lot of discussion about how you allow information to be freely gleaned, you do these things, but is there an investigation or an understanding about what might be risky even though you accept it, or fraud? Anyone?
I'm happy to take that one, Congressman.
Thank you very much.
So I want to share a little bit. This is specific to the Coinbase platform. So on the Coinbase platform, we have various tools. One, in onboarding, as we've talked about, we do KYC, but also in when we onboard our assets. So we offer, as I mentioned, over 100 assets for trading on our platform. We have a robust assessment of each of those assets. We're looking at it for legal risks. Do we think it has the contours of a federal security? We do not list securities on our platform. Two, we're looking at it for compliance reasons. Is this a scam? Are there real people behind those?
Right.
Are people behind them on the OFAC list? We don't want to list that token. So we're doing a full compliance review of the founders of the coin, the developers on the project, and then we're looking at it from a security risk. Can we safely secure and store this on our platform, or is there underlying technology risk that would be rising to a hack? So one way we look at fraud is when we list an asset to make sure it's not a fraudulent asset. Two, through our market rules, we do have traditional exchange rules for looking for spoofing, for wash trading, for all sorts of market manipulation on our platform. that we have third-party tools as well as employees that came from former regulators or from traditional financial services that do 24/7 monitoring. Much like Mr. Bankman-Fried responded to the risk models, we do compliance monitoring on a 24/7 basis. We also then monitor the blockchains. One of the wonderful things about this technology is the transparency. And so we can look for transaction activity, look for patterns on the blockchain, and then we partner with law enforcement. We file SARs, and we have traditional approaches, much like you would see in finance, but the transparency really changes what we can do here.
I think that that's a key, at least to me. If you knew anything about the Medicare system, you have Medicare providers, and we have probably 18% fraud in that system. That is a federal system that's been well understood. Wherever you open up your door, whatever your storefront is, there's somebody there that's going to try and find a way to take you, to spoof you, to take advantage of this. And it seems like to me that is something that if you have accepted this as part of the duty that you have to make sure for the integrity of your system, it seems like to me that I have satisfied myself that what you have not just have ongoing, but where you think you want to go, we need to be supportive of you. We need to look at you as less of as something that we ought to get in and understand and tackle you and hold you back, and more to what we believe the future should look like for people around the world and people in the United States. I would simply say to you, I encourage your integrity. I encourage you to avoid the pitfalls that come from there being some fraud that was hidden for a long period of time, and the industry knew it. We've seen this happen in companies. I don't need to go through that, where fully vetted market individuals still did something wrong. So, Madam Chairman, I want to thank you for doing this today. I think it's good for all of our members, and I in particular want to thank my ranking member for his proactive viewpoint of Republican members that I hope would be supportive of what you're saying today. Thank you very much.
You're certainly welcome. Thank you. The gentleman from New York, Mr. Meeks, who is the chair of the House Committee on Foreign Affairs, is now recognized for 5 minutes.
Thank you, Madam Chair, and I want to thank you too for putting together this very, very important hearing. Look, the future is in innovation and financial industries is just unavoidable, and to get ahead of it. So your foresight, along with the ranking member to do this, is really important. Let me first ask my question to Mr. Alir. As you may be aware, communities of color often rely on minority depository institutions and community development financial institutions to safely do business and get access to crucial banking needs. And given their important role as well as the challenges that they face, I've been a long advocate for robust partnerships whereby MDIs and CDFIs can leverage new technologies to better serve their communities, as well as I applaud Circle, actually, for using and exploring such partnerships and creating an initiative to deploy and share USD coin reserves into these MDIs and CDFIs, enhancing financial inclusion. So my question really to you is, can you provide us a status update on where Circle is in implementing this program, and what sorts of systems will be developed to ensure the long-term success of the program?
Thank you, Congressman Meeks. I appreciate the question very much. For those on the committee that are not familiar, we recently announced a new broad-based company initiative called Circle Impact. It includes several key initiatives. First and foremost, something I did reference in my testimony as well, is an initiative to take what we hope will be billions of dollars of the deposits that are held behind USDC and actually place those with minority deposit institutions and community banks throughout the United States. I think one thing that's important to understand is that unlike a bank that wants to maybe hoard its deposits for its own lending business, as a full reserve model, we're not in the business of lending. And so it's a tremendous opportunity for us to work closely with banking institutions that could benefit from strengthened balance sheets, that could benefit from what that can then do, what that in turn can do to open up credit and lending and other opportunities in these underserved communities. So this particular initiative is one that we've just began. We expect to have the first wave of that in place by the end of the first quarter. We are also looking to coordinate with federal banking regulators who have their own initiatives that are focused on supporting MDIs and community banks. And we view this as a really critical and strategic part of what we can do to foster a more inclusive financial system. Final comment is simply that we believe that the technology of digital currency, the frictionlessness, the way in which individuals with mobile devices can actively participate, and not just domestically, but interacting with family members around the world and safely exchanging value, that these can also bring significant benefits to these communities. And we will certainly keep the committee up to date on progress with this initiative.
Well, thank you very much for that. And let me go to Ms. Hass real quick. You talked about technology enhancements, and I know that crypto and digital currencies can bring to our financial markets that they're really impressive. For example, I know a lot of communities rely on these new modes of payment systems to send money to their families in their home countries. And, this type of activity is, of course, extremely useful to our global economy, which is really important. But there are also bad actors out there that could use crypto or digital currencies to hide cash from illicit activity. Also, people can hide cash, not to pay their support payments and other things. So my question is, how can we, and what is being put in place to keep the bad actors out there? And so, I know in your testimony, Ms. Hass, you mentioned that there's a small amount of non-compliant foreign exchanges where criminal actors benefit financially from illicit activity. So what's your assessment of our global coordination on stamping out such activity, and what more can the United States policymakers do to better coordinate with regulators across shores to prevent this arbitrage that you referred to?
Thank you so much for the question. So as I shared on the Coinbase platform, we do have KYC, a BSA AML program, and we ensure that we know who our customers are and then have clarity on those transactions. I know other U.S. regulated exchanges that we speak to have similar controls, and everybody on this panel here today, I think, shares those views. There are players who do not follow these, and I think that that is where regulation should be focused, to make sure that there's an expectation on what it is to perform as a digital asset marketplace, and that was part of our policy proposal.
The gentleman's time has expired. Thank you. The gentleman from Missouri, Mr. Lukemeyer, is now recognized for 5 minutes.
Thank you, Madam Chair. In 2019, the average daily turnover value of the U.S. dollar constituted 88% of foreign exchange market transactions globally. This dominance by the dollar in global marketplace is a key reason why the dollar remains the reserve currency of the world. Mr. Brooks, welcome back to the committee. It's good to see you again. I think we've actually talked about this subject before in the past. But as digital assets become more common in the global marketplace, with the total digital asset market reaching almost $3 trillion, as Ranking Member McHenry just said, how do we ensure the U.S. dollar remains the reserve currency?
Well, Mr. Lukemeyer, it's terrific to see you again, and I'd give you a couple of thoughts on that important question. One is, if we start with stable coins before we talk about other crypto assets, I've said for a long time that the secular reduction in dollar holdings as a percentage of global central bank holdings is alarming. And this has been going on for more than 10 years at this point. So dollars as a share of the European Central Bank, the Japanese Central Bank, et cetera, has shrunk from 80+% to more like 60+% in a short amount of time. What that tells me is that in the future, with the rise of China and other major economies, the US dollar can't take its primacy for granted, and we need to start thinking about competing on utility, on features, not just based on a post-World War II monetary system that we could take for granted for the last 2 generations. And that's one of the reasons that I've been such a supporter of internet-enabled dollars, which allow us to compete on features, not only on history. I think that's really critically important. The second thing I would tell you is, as we enter year 11 or 12 of a highly inflationary environment, after all, we've been printing enormous numbers of new dollars since the financial crisis, there will come a time, gradually then suddenly, when the attractiveness of the dollar relative to other currencies could change. One of the benefits of the crypto economy is that it creates some counter incentives on the part of the Fed to do that kind of policy, because people will flee to other kinds of assets. And that sort of market competition is something that I think will ultimately shore up our monetary policy and keep the dollar where it rightfully ought to be, which is as the dominant reserve currency it's been for all of our lives.
Yeah, it's very concerning to me that if we lose that position where our economy, our whole country, our way of life is at risk. Mr. Allaire, you made a comment in your testimony with regards to promoting the dollar as a primary currency. I assume you've got a thought on this as well.
Thank you, Congressman. Absolutely. I think, as I introduced in our in my initial remarks, we're at a really interesting moment in time. We're seeing this infrastructure layer, these blockchains, proliferate globally at incredible speed. It seems likely to us that the ability to access and interact with these blockchain networks will reach billions of users over the next 2 to 3 years. And the question is, in that time frame, will the United States support the dollar and digital dollars in the form of stablecoins, because they're in the market and operational today, to help the United States dollar be the competitive currency of the internet? I think that's the opportunity. I think it's in front of us right now. And it's one of the reasons why we're so focused on this as a national economic, and not just a national economic priority, a national security priority, because clearly, if this is the new infrastructure, economic infrastructure of the internet, we want the dollar to play a critical and strategic role. And partnering closely with private companies and using open internet technologies becomes a way for the United States to compete versus states that are seeking to nationalize that infrastructure, operate it themselves in a surveillance-oriented model.
Well, it's interesting that you were talking a while ago, I think Ms. Velasquez asked questions about reserves, and I think you were talking about basically a one-to-one amount of backing of your coin, of your asset with U.S. Treasuries. So you're looking, I think, at the value of your that you're backing up your digital coin with is basically the full faith and trust of the United States government. Would that be correct?
That is exactly correct. And I think, in many respects, the assets that back these dollar digital currencies are in many ways far safer than the dollars in a bank account, because dollars in a bank account, as we know, are fractionally reserved and lent out. And so this is
I don't interrupt, but I got one quick question for Mr. Brooks with regards to, you talked about a minute ago with control of, owner controls the network. We had Mr. Zuckerberg in here when he was trying to talk about his Libra. And the control of that, the value of it was going to be with a commission. My concern is who controls the internet. We've seen Twitter, we've seen Instagram, we've seen Facebook control people on their platforms. How concerned are you about outside forces controlling the platform on which the digital dollar is traded?
Well, Mr. Lukemeyer, I'll do you one better on your hypothetical, which is we've now seen major banks deplatforming both industries and individual customers for not sharing the right point of view. So these are scary ideas. The point of crypto is to have true decentralization, and the project that succeed will be the projects that achieve that. Bitcoin succeeded because there are literally millions of participants in the node network, and so there is no CEO of Twitter to deplatform you, there's no CEO of JP Morgan to take away your credit card. It's user controlled. Some of these won't achieve that. They'll be consigned to the ash heap of history, I predict.
Thank you very much. I'll yield back, Madam Chair.
Thank you. The gentleman from Colorado, Mr. Perlmutter, who is also the chair of the Subcommittee on Consumer Protection and Financial Institutions, is now recognized for 5 minutes.
Thanks, Madam Chair. Mr. Brooks, good to see another Coloradan on the panel. But I want to start with a couple questions for you, Mr. Bankman-Fried. And Ms. Haas mentioned knowing your customer. They avoid getting into the securities transaction business as to the best of their ability. That's one of the things they look for. So, Mike, I've got several questions for you, and then one of them will be from completely left field. All right? So get ready for that one. Cryptocurrency market exchanges such as yours are regulated through a patchwork of different state and federal agencies. For instance, some exchanges register as money services business with FinCEN at the federal level and may also receive money transmitter licenses, and you talked a little bit about that in your opening. How is your company registered in this context?
Yeah, thanks for the questions, and looking forward to the left field question at the end. In addition to a bunch of international licenses, in the United States, we are participating in that system you referenced with the money transmitter and money service businesses licenses. In addition to that, however, we are also licensed by the CFTC. We have a DCO, a DCM, and other licensure from them through FTX US derivatives. And we look forward to continuing to work with them to build out our product suite. We just submitted a 800-page, I believe, proposal to them a few days ago, which we're excited to discuss. And we're also happy to talk with other regulators about potential products in the United States.
All right, well, let's talk about another regulator that may touch on what you do. You talked a little bit about derivatives and the fact that derivatives were, sort of a key component in the failure of the financial markets back in 08 and 09. Is FTX registered with the SEC?
So the core derivatives regulator is the CFTC, and FTX US derivatives is registered with the CFTC. With the SEC, we have begun discussions there and excited to continue discussions there. We do not list securities on our platform as of now, although we would be excited to explore listing digital asset securities in the future under the guidance of the SEC. I will also say briefly that I would be excited to see a unified joint regime with both CFTC and SEC involvement to create sort of harmonious markets regulations between spot derivatives contracts and other things.
All right, now the left field question. So, our role here, there's nothing new under the sun. The technology may change, it may speed things up, it may make it more transparent, but a deal's a deal. Who's taking on the risk, who's getting rid of the risk, who's the middleman? So one of the things we hear about blockchain is that it's invulnerable, it's impenetrable, it's something that's super secure, and our responsibility is to make sure that things are generally safe, generally honest, that people aren't swindled. So I also sit on the science committee with Mr. Luchtemeier, and the ranking member was talking about we're at W3, all right? In the science committee, we're doing a lot on quantum computing. And so my question to you is, what threats or benefits to a blockchain system will come from quantum computing?
Well, thank you for the question. In terms of the threats, some cryptographic algorithms are not, at least theoretically, might not be secure under quantum computing. Obviously, this is going to depend on the exact details of what comes. And it's important that, if and when that comes, that, blockchain security algorithms are resistant to that. On the same front, I think it has the potential to create, basically new cryptographic algorithms that are faster, that are more secure, and that are, more efficient from a number of different perspectives. So we'll see what happens there.
All right, I have a million other questions, but I don't have enough time to ask them. I'll yield back.
Thank you very much, Mr. Perlmutter. The gentleman from Kentucky, Mr. Barr, is now recognized for 5 minutes.
Thank you, Madam Chair, and thank you for holding this important hearing. Mr. Brooks, good to see you back in front of our committee, and to all of our witnesses, thank you for your testimony. Mr. Brooks, I will start with you, and this is a bit of a follow-up to Ms. Wagner's question, but do you think Congress needs to introduce legislation to provide more definitional clarity with respect to digital assets? And if so, do you have any specific suggestions?
Well, I really appreciate that question. That is the most important issue in the short term for the industry. And so let me just pick up where Mrs. Wagner left off. If the question is the current test clear, it's clear in the sense that we know what it is. It's not clear in that it's a four-factor balancing test. So I often think about what like the U.S. trucking industry would be like if the truckers didn't know that the speed limit was 75 miles an hour. They just had a four-factor test of general safety having to do with how much sleep they got the night before, the overall size of their payload, and other factors. People need to know what the speed limit is. In my old agency, the OCC, what would happen is a bank would come to us with a new activity proposal, and we would give them an answer. We would either give them a non-objection or we would not give them a non-objection, and it was very clear whether they would be allowed to access that. What happens in the United States is you have a new crypto project, and you walk into the SEC and you describe it in great detail, and you ask for guidance, and they say, we can't tell you, and you list it at your own peril. So whether this comes from legislation that defines what is a security and what isn't a security, or whether it comes from Congress in the form of legislative discretion to an agency to say what is a security, I would argue that a four-factor balancing test is no better here than it is as truckers drive down the highway guessing what safe is.
Yeah, and Chairman Gensler has been quoted as saying the test to determine whether a crypto asset is a security is clear. Mr. Brooks, do you agree that that test is clear? I take it from your previous answer, the answer is no. But could you walk me through the process that exists today to determine if a digital asset is a security?
Yeah, well, thank you for that. The best test that is out there is a test that several of us on this panel actually helped to develop about 3 years ago as part of an industry organization called the Crypto Rating Council. When I came to see several of you several years ago in connection with the Crypto Rating Council, the way I described it to you was it's sort of like motion picture ratings for crypto. We don't know authoritatively what's a security and what isn't because no authority will tell us. But what we can do at least is we can tell you the difference between an R-rated asset and a PG-rated asset, and people can make their risk tolerance judgments. So the way that process works is it's an objective, quantitatively based process that asks several dozen questions about the asset across each of the dimensions of the Howey Test. It gives you a number, and that number tells you how close you might be to danger and how far away you are.
Let me interrupt and just say, I recognize that some rules or federal regulation of both digital assets and cryptocurrency trading platforms might be supportive of bringing clarity, but I'd never underestimate the ability of the federal government and regulators to stifle innovation. Can you give me an example of an overreach that would stifle innovation?
Well, the idea would be to say to let traveler's checks exist inside the banking system and not bring a stablecoin issuer inside the banking system when they've applied.
Okay, Mr. Lair, to you, can you talk about the difference between a stablecoin versus a central bank digital currency, and what advantages does a stablecoin offer that a digital dollar, say at the Fed, would not be able to offer?
Thank you, Congressman Barr. I'm happy to. I think the first difference is that stablecoins are operational and growing in the market today, and they're built on an open internet technology model. So when we think about all of the things that we've seen built on the open internet, on these open protocols and networks, whether it's ubiquitous information exchange, communications, interaction around the world, that same open internet model is the foundation for stablecoins. And so I think that's a fundamental difference. A CBDC, which is a concept right now, it's not operational, would very likely be a very closed-loop technology that's tightly administered and run by the government, and would unlikely be accessible in the same way that these open networks are accessible. And so I think that's a critical difference. But I would come back to the most important, which is that most payment system innovations in the world have been driven by the private sector. And I think what's taking place today with digital currency is no different.
Could stablecoin and your product, could it address some of the concerns about China's advances in terms of, and the threat that China's advances pose to sanctions enforcement and protecting the dollar as the world's reserve currency?
I think so, yes. I mean, coming back to this, and I'll try and make this point concisely, the United States and the US dollar is winning the digital currency space race today. Dollar stablecoins are doing trillions of dollars of transactions. The experimental beta of a Chinese yuan, which is government controlled in China, has done $10 billion of transactions. So the United States is winning. this has potential to grow at a very significant speed around the world and benefit the US dollar and benefit American businesses and households. And so I think that's one really, really critical thing to understand. And I think the primacy of this infrastructure and the development of this infrastructure, it is a strategic national security and national economic priority for the United States, and we need to get going on it right now.
Thank you. I have many other questions as well, but my time has expired. Thank you, Madam Chair.
Thank you very
Go back.
much. The gentleman from California, Mr. Vargas, is now recognized for 5 minutes.
Thank you very much, Madam Chair. I appreciate very much you bringing this to our attention. Appreciate the ranking member, everyone participating today, especially the witnesses. One of the things that's been interesting, I've heard a lot of very high and noble motives today. I think I don't want to misquote people, but I've heard that the digital asset world, the open internet model, it's for all people in the world. It's easier, cheaper, open, free market data. It's transparent, reduces risk, not increases risk. There's less friction in the marketplace. These things are all great, but it's interesting that most of the people that I know that have invested in cryptocurrencies, not because of that, it's because they think they can get rich quick. And the appreciation of Bitcoin is something that they want a part of. It's not because of all these other wonderful things that the internet can do. It's not the reason at all. Secondly, it's interesting when I ask them, well, you know what cryptocurrency and digital assets and Bitcoin, what it actually is? Most of them say, no, I just know that, make a lot of money and I want to invest and I want part of it. I want to be able to invest because I know that that's appreciated. Now, we've seen this before, unfortunately, and it led to, I think, a financial crisis around the world when you were investing in derivatives and other things that people didn't know what the hell they were investing in, and then it became very problematic. So I do see the risk in this. Now, I have to say, when this was a B problem or a B issue, $1 billion problem, didn't seem as such a big deal. But now that it's become a $1 trillion issue, and I do think it's challenging really the supremacy of the dollar around the world, I do think it's potentially a big problem. I do have concerns. I want to follow on to what Mr. Barr said. The issue of the dollar being the reserve currency, this seems it does challenge it. Does someone want to comment on that? If not, I'll pick on somebody in
I'm
particular.
happy to comment, Congressman. I wanted to respond to a couple things in your comments. I would agree with the fact that there are passerbys, and then there are people who are actively building and who are very, very close to the technical innovation. And I think like investments in technology companies or in other businesses that we see in the stock market, you have people who are investing because they think it's a business or a product that might go up. They may not understand the details of a given pharmaceutical company's science, but they believe that perhaps it's an area of innovation and they want to invest in it. And so I do agree that there is that distinction. But I think it's certainly incumbent on all of the industry participants to ensure that there's great amount of disclosure, financial literacy around these products. But more importantly, coming back to the comment about the dollar, I think there is this growth in digital assets as a new kind of asset class. And I think what's important to note is understanding those in contrast to fiat currencies. Many of the digital assets, in fact, I think the overwhelming majority of the digital assets are commodities that have utility, that are used to power some kind of technology network or protocol, more thought of like an oil or gas than a fiat currency. So they exhibit those properties. And I don't think those will ever rival the dollar. I think they'll grow in value because they're utilized to help facilitate all kinds of activity on these Web3 applications and networks. And I do believe that with innovations like stablecoins and dollar digital currencies, we could actually see a dramatic amount of growth in the use of the dollar globally.
I'm gonna reclaim my time just for a second, because one of the things that I see is that we do have we have the digital dollar already. I mean, the digital dollar can do all the things that you guys were talking about today, with the exception that it is a fiat currency that wouldn't be as easily manipulated by some nefarious group because it would be controlled by the Fed and the United States of America. I mean, I do have great apprehension that you have these cryptocurrencies that are used by drug traffickers or used by people trafficking other human beings, and there's no good way to control it. So I'm all for digital currency, but why not the dollar? Why can't the dollar be the digital currency? Why can't we once again dominate not 60, 80%, but maybe even higher with a digital dollar? That to me makes much more sense, and it's much more protected and people won't have the risk. But anyway, I yield back my time, but I did find this a very interesting discussion. Thank you.
Thank you very much. The gentleman from Texas, Mr. Williams, is now recognized for 5 minutes.
Thank you, Madam Chair. And for those of you who don't know me, I'm a small business owner in Texas and still own those businesses. I'm a car dealer and a former professional baseball player. And when I'm trying to wrap my head around a new topic like cryptocurrencies, I try to relate it back to something I understand, like baseball or business. Now, some of you may know this, but modern-day baseball can really be attributed to Babe Ruth. He brought in the live ball era of the time and introduced power to the baseball diamond, and before this, teams would play small ball that was very conservative, where teams would literally play for one run a game. The entire objective was simply to get the ball in play so they could try to steal their way around the base paths. And there was nothing wrong with this old way of playing, but when the White Sox won the World Series in 1906, the entire team had a total of 6 home runs all year. But Babe Ruth came along. Babe Ruth came along and totally changed everything. In 1920, he set the American League record of home runs with 54. To put that into perspective, how fantastic this feat was at the time, the previous mark to be set was by Sock Siebold in 1902 with just 16. This introduced an entire generation of new baseball fans, and for the first time ever, the New York Yankees, over 1 million fans came to see them in a single season. Now, with that being said, many of you are becoming the Babe Ruth in the financial space, services space. You're introducing a blockchain technology to the financial services industry and working to upend the tradition and the traditional way of doing business. And while many economists and so-called experts have blockchain technologies, all of you were working tirelessly to create something new in order to bring this new technology to the masses. Unfortunately, it would only take a few misguided curveballs, we'll say, from Washington to undo some of the progress you've all put into this motion. So my first question to you, Mr. Brooks, can you talk about some of the negative consequences that could happen if we take a heavy-handed approach to regulating this developing technology?
Well, Mr. Williams, as a long-suffering Dodgers fan, I share a lot of the things you're talking about, and I think the era you're talking about was an era when baseball went from focusing on not losing to an era where it focused on winning. And winning and not losing are not the same thing. So I come back to Mr. Vargas's question a second ago, which I think is the right way to answer your question. You know, Mr. Vargas asked the question of people have the potential to lose a lot of money. These things are volatile, they're risky. How do we protect them from those kinds of issues? There are 2 ways of answering that. One is to prevent as many people as possible from accessing this amazing technology. For example, the way the current legal regime works is certain kinds of assets can only be purchased by accredited investors, meaning rich people. So the only people who can get rich on this are people who are already rich. That'd be one way of protecting people from losing money, is to make sure that only the richest can access it. Another way of addressing it would be to make it safer the way that we made equities safer 40 years ago, right? We created mutual funds, diversification, sector funds, and other things that make it easier for regular Americans from places like my hometown in Colorado to buy equities without having to be stock experts. Strangely, in the US, we've refused to do that so far. So we don't allow crypto mutual funds. We don't allow people to diversify the way that they do in Canada, Germany, Singapore, the United Arab Emirates, and a series of other regulated economies around the world. So I would argue the way to win is to bring more people into the system more safely, not to keep them out at their own peril.
Great. Second question, we often hear that crypto industry is the wild, wild west, where there is no regulation guiding the industry. But as all of you are aware, that simply is not true. The SEC and the CFTC are the primary federal regulators, and our states also have strict regulations that all of you must be abiding by. So, Mr. Bankman-Fried, can you discuss the different layers of regulation that FTX must abide by as an exchange, and also in order to uphold customers' deposits in your digital wallets?
Yeah, thank you for the question, Congressman. And putting aside the 190 other regulatory jurisdictions that we take part in and the dozens of licenses that we are acquiring each month in all of those, in the United States, there is the sort of state-level money transmitting license regime with money service business and MTLs, which we and many others are part of for any margined or financed or derivatives transactions in the United States. There is a CFTC regime where there's licensure required to offer those products. For any products that might be a security as a digital asset, there doesn't exist a current very clear pathway for it, but that would be an SEC registered regime for it. Obviously, there's been lots of discussions about additional registered regimes for stablecoins and other assets as well.
Thank you. I think my time is up, Madam Chairman. I yield back.
Thank you very much. The gentleman from Illinois, Mr. Caston, who is also the Vice Chair of the Subcommittee on Investor Protection, Entrepreneurship, and Capital Markets, is now recognized for 5 minutes.
Thank you, Madam Chair, and I came up vastly before I thought I was going to, which means that you'll have to humor me for my ill-formed thoughts. I really appreciate our witnesses coming here, and I also feel terrible for you, because we could have an entire hearing on stablecoin, we could have an entire hearing on blockchain, we could have an entire hearing on CBDCs, I suppose, and we could probably have an entire hearing on whether or not things that have forced scarcity are inherent stores of value, except that I think we resolved that 100 years ago, but yet we still sort of need to debate it periodically. All that said, I want to start just focusing on stablecoins, if I could. And Mr. Allaire, want to start with you, and I'm sure you've seen the Presidential Working Group's report, raising all sorts of issues with stablecoins, primarily around do they really look like money, right? Do they have sufficient reserve assets behind them? What are the redemption rules? Is there transparency around permissioned blockchains, the custody of reserve assets? You've read the report, I'm sure. I see you nodding, could go on. First question is just really simple. Do you support the recommendations of that report for stablecoins?
So I support a number of things, but not uniformly. I think there are a number of challenges with the report. I think the first maybe to discuss is really this question of what form of federal charter ought to be in place around a large-scale dollar stablecoin issuer. I think the report recommends that it would be an insured depository institution, but I think one of the really critical things to discuss there is an FDIC-insured bank is FDIC insured because the bank is taking risk with deposits. And
if I could, and I'm apologize to get you off, but I want to just narrow sort of specifically to the issue of if I deposit something in a bank that is indexed to $1 and I perceive as a customer that I've eliminated the FX risk, right? But now I'm left saying, is it actually there when I want it and are there sufficient services? Setting aside how we get it done, broadly speaking, are you supportive of the idea that if this is going to look and feel and attract investors with the expectations that this has all the risk and liquidity profiles of $1, that we should make sure that it actually has those features?
Absolutely. So full reserve, disclosures, transparency, I think definitions around what those reserves are and the liquidity mandate on it, those are all really critical features that need to come in place. If it's full reserve, is it an FDIC insured product or is it a statutory set of constraints around what the reserves are? So those are some of the things that I think have to be worked through.
And I want to get to two more questions, so apologize if I'm being quick, but in the absence of those protections being in place, it seems to me that somebody who is currently holding a stable coin perceives that they are holding a currency, but in reality is holding something that is subject to a lot of exogenous risks beyond their control, which feels a lot more like a commodity. So if we agree that as of right now, it's not really a currency, would you also be supportive of saying, well, we should regulate it as a commodity until such time as we have the protections in place to give it the robustness of a currency that the market is expecting of it?
So I don't agree with that, but I think it raises a couple of key points. So the first is, and I can only really speak on behalf of Circle here, USDC, for example, operates under the same stored value electronic money and electronic money transmission statutes that govern Square and Stripe and PayPal and the balances there. So today, there are consumer protections. There are reserve requirements around holding of those assets, one-for-one redeemability, anti-money laundering requirements, surety bonds that need to be posted to protect consumers, segregation of client funds and for benefit of customer accounts. So there's a great deal that's there. And we have operated under such statutes really since 2014. We were the first company to go and get all those licenses. So there is a framework today. I think as these get larger and are operating at a global scale, I think really it's, does there need to be something more that's more bespoke to this?
Let me, if I could, because I'm just nervous watching the time here. Let me sort of get to the last question, leave it to the whole panel, and if we're out of time, we'll follow up separately. The concern I have is that a stable coin at some level is an ETF, right? And we could imagine a stable coin indexed to all sorts of different currencies and some kind of baskets of currencies that are behind there. And we regulate those in certain ways with expectations of who is bearing the risk, to Mr. Perlmutter's question. We have this emerging world of central bank digital currencies, and I'm satisfied that no central bank wants to allow counterfeiting. They all want to protect the integrity of their currency, and so they'll put those rules in place. On the other hand, different countries are going to have very different ideas about what kind of data they would like to track when we trade a central bank digital currency. And so, a question for any of you who feel technically competent to answer this: if you have a stable coin that includes some portion of central bank digital currencies that are tracking things that we as Americans would not like to track, can we design the stable coin to insulate the contamination of that system so that somebody who believes that they are buying something that looks like a dollar is not actually being tracked by our adversaries? Anybody like to comment on that?
I'll make one quick comment, which is one of the benefits of this technology is these stable coins, all of the code that they provide and how they interact is all public and open source. And so everything that functions inside of that is visible to everyone that interacts with it. And so there is the ability to have, I think, greater transparency into how are these things functioning, including a foreign issued coin.
I'm out of time, but I do have some, I think there's some
Gentleman's
concerns
time
about the
has
encrypted
expired.
rules as well. Thank you. If anyone would like to follow up, I'd love to.
The gentleman from Ohio, Mr. Davidson, is now recognized for 5 minutes.
Thank you, Madam Chairwoman, and thanks to the ranking member, thanks to our witnesses, and frankly, many people who've worked literally years to get to this point to have a hearing. The market has been way ahead of this, and frankly, it's been painful to watch, in 2017 and since, when you see the ICO market ripe with people committing fraud or just regulatory arbitrage, taking advantage of the fact that our regulators haven't paid attention to bad actors. And it's been especially frustrating to watch some of our regulators take aim at people that are working very hard and very aggressively to be legitimate businesses, to come into compliance with every kind of licensure and regulatory regime that our country currently offers. It's been woefully inadequate, and so it's so good to get to this point for the hearing. So thank you, and then thanks to my colleagues. I've been very encouraged by the amount of preparation many colleagues have done to close the gap in any knowledge they've had, and over the past few years, the number of members of Congress that really understand this space has certainly increased. 3 years ago, we had a hearing, not really a hearing, because as a junior member, I can't hold those or pick them. So in exasperation, we just held a meeting over at the Library of Congress, and some of the folks in this room were there, or representatives from your companies were there, and we came up with the most essential thing was to establish a bright line test, not just for the players in the industry, not just for the investors, but also for the regulators. So that if somebody at the SEC, for example, says this looks like a security, it's not a form of interpretive art to say, does it really fit this test? We came up with 4-part test that said it's already created, it exists, that it is recorded on a distributed, secure, and immutable ledger that is not controlled by a central authority, that permissionless peer-to-peer transactions can be done without an intermediary, and it does not represent a financial interest in any entity. More important than that particular test is the fact that there is, as Mr. Brooks, you highlighted, a speed limit, so that there's some clear thing, not just, as I say, for the investors, not just for the participants in the market, but for the regulators themselves so that we have continuity. If only there were such a body that could provide this clarity. My hope is that the next time we have a hearing, we will notice some bills and we'll be able to talk about particular text towards that. So, Mr. Brooks, when you look at stable coins, which maybe is the lowest hanging fruit, some of those are established well in long-standing things like New York trusts. Some of those aren't traded in anything. They're just U.S. dollars stored in a vault for every token. Some have U.S. dollars in components of M2, like U.S. Treasuries. Some have other things. When you were at the OCC, you provided some clarity there, and you also dealt importantly with self-custody. Mr. Allaire, you mentioned that the code is literally online. Any of us right now during the hearing could download code and could begin to self-custody a digital asset. So as you look at that, how important is it to provide this clarity, Mr. Brooks?
Well, specifically on the issue of custody and self-custody, this is a way that crypto tries to make an advance over the current system. So the issue with custodial assets we've seen, and this committee's looked at many, many times. Think about the financial crisis when there was an issue of foreclosures, and it was difficult for custodians to produce the original note that proved whoever was entitled to enforce that transaction and foreclose on a property because the piece of paper had gone missing or the custodian had merged with another custody company or whatever. One of the things crypto's trying to do is to use technology so that you can safekeep your own assets for free versus having to pay somebody else to custody it. That also provides a layer of financial privacy, something that this committee usually favors, but sometimes, strangely, doesn't favor. So self-custody is one of the key things, along with self-ownership and self-determination on this Internet of Value, that's really critical to the nature of the network.
Yeah, thank you. And as we've digitized information, it's frankly, amazing that we've finally digitized money in a way that we can move not just a store of value, but a means of exchange. The use case for digital assets has partially been that it's this stable store of value. Certainly stable coins solve that. Some have pointed out that Bitcoin, for example, doesn't. And, Mr. Bankman-Fried, one of the ways that people have speculated that the volatility is created in the market isn't by holders of the asset or hodlers, hold on for dear lifers, as has become known in the space, but by the other big group that owns these assets, which are traders. Many of them trade on leverage. And so when you look at leverage, you made a lot of news by saying, we're capping people at 20 times leverage. That's a lot of leverage. But you also pointed out that the average leverage on FTX was around 2x. So could you talk about the importance of leverage in volatility?
Thank you for the question, Congressman. The first thing that I'll say is in cryptocurrencies, in digital assets, as like essentially every other financial asset in the world, more volume trades through futures contracts than through the spot asset. The reason for this is basically it's more economically efficient. It's much more capital efficient. The lack of an immediate delivery requirement on the physical creates a much easier ability for people to hedge exposure, for people to express opinions. And so for all those reasons, I think that they're an important part of the digital asset ecosystem, as they are of every other ecosystem. I'll just briefly say it's important to have robust risk engines that monitor the positions on these assets. We've gone through multiple very large up and down moves and been able to manage positions both times.
Thank you, and thanks again for the hearing. I feel like I've spoken to Steve Case in like 1990, so thanks for the vision that you guys have, and thanks for the hearing, Madam Chairwoman.
You're welcome. The gentleman from New York, Mr. Torres, is now recognized for 5 minutes.
Thank you, Madam Chair. So I represent the South Bronx, which is often said to be the poorest congressional district in America, and of greatest concern to me are the use cases of crypto that would improve the lives of the people of the South Bronx. I represent a heavy population of immigrants who often pay predatory fees in order to send remittances to their loved ones abroad. So what can crypto, blockchain, Web3 do for that Dominican immigrant in the South Bronx who is burdened by remittance fees that she cannot afford? How much more affordably and quickly can the crypto economy facilitate remittances? Mr. Cascarilla, if you could take that question and please be specific.
Yes, thank you for the question. I think this is a really important element of the technology, which again is that it's open to anybody. You don't need to have a bank account. You don't need to in fact, rely on any intermediary. So somebody who's an immigrant and wants to send a remittance to a family member in another country is able to do that. And there's ways to do it with both crypto and to do it with a stable coin. And all you need to do is download a wallet, and then you can send it to somebody else anywhere in the world. And so this is a really powerful tool for democratization of access, especially for those who have difficulty getting bank accounts. There's no minimum fees, there's no minimum balances, there's no check cashing fees that are part of this technology. And you can do it in some cases for, a penny or less.
And how much quicker?
Well, this is an important point. Blockchains, part of the beauty of them is that they're operating 24 hours, 7 days a week, 365 days a year. So it can be sent just about instantaneously. There's no multi-day lags that you have right now. And that change in the speed is just crucial because usually it's these lags that really are very costly.
I'm going to interject. Mr. Brooks, I have a question about the challenge of enforcing laws in a world of decentralization, whether it be law enforcement relating to financial crimes or SEC disclosure. How exactly do you enforce the law when there is no central entity against which to enforce the law? How do we grapple with that challenge?
That is a great question, Mr. Torres. I really appreciate you asking it. So I'd say a couple things about it. First of all, to the extent that some of the activity we're talking about is parallel to activity that happens in the supervised system, my question is, why don't we allow it in the supervised system? Again, you've heard me say it before this morning, but you have on this panel a big stablecoin issuer who's applied for a bank charter. Doesn't look like they're going to get it. Easiest way to supervise that would be to let them in the banking system and have the OCC have authority over them. So I'd start with that. The second point is lots of these decentralization protocols are designed to solve the exact problems that create the need for enforcement in the first place, because most enforcement in the securities and banking system is about some combination of human error, human negligence, human greed, or human bias. And the point of some of these decentralized systems is to take that out and have an open source piece of software everybody can look at and do with those things algorithmically. So as an example, I used to sit on a bank credit committee. We would decide who got credit and who didn't. And I think we had a really good system for it, but we were human beings. We might have been indulging in implicit bias. We might have made mistakes. Algorithms don't do that. So some of the need for what you're talking about goes away in a decentralized system.
And I know there are critics who have said that the blockchain might not be as secure and as unhackable as advertised. But for me, the proper question is not whether the blockchain is perfectly secure and unhackable. The question is whether it's better than everything else. Like Winston Churchill famously said, democracy is the worst form of government with the exception of everything else. Is there a computer network that is more secure than the blockchain?
Well, I think the beauty of the blockchain is not that it's perfectly secure, it's that it's perfectly transparent. So you can see when somebody's screwed around.
But I want to specifically address security. Is there a computer network, to your knowledge, that is more secure than the blockchain?
I don't know of one, but we have a PhD in physics sitting right next to me, so we'll let him answer.
If you're talking about any major globally used blockchain, I don't know of one. There are small blockchains that are less secure. All the major ones are incredibly secure.
And one of my concerns about crypto is that it would present a challenge to the supremacy of the US dollar as the world's reserve currency. But what I have found striking is that the leading stablecoin issuers have actually chosen to peg their stablecoins to the dollar, which strikes me as a vote of confidence that reinforces rather than challenges the status of the dollar as the world's reserve currency. So what are your thoughts on the relationship between the dollar and the crypto? Is it as contradictory as many have feared, or could it be actually complementary?
I'll answer that. I actually don't think that it's contradictory at all. What people want is a US dollar bank account. Everywhere in the world, people want to be able to have US dollars. And actually, that's the hardest thing to get. And crypto is a tool for a lot of different things, including bringing communities together. But what people want in order for their everyday spending, it's dollars. If you're in Argentina, you want dollars. If you're somebody anywhere in the world, you want to have access to dollars. And that's the hardest thing to get access to right now. And that's why tokenized dollars is so valuable, because you don't need to have a bank account, yet you can have access to the dollar-based system. And a very, very important tool for inclusion.
The gentleman's time has expired. The gentleman from Michigan, Mr. Huizinga, is now recognized for 5 minutes.
Thank you, Madam Chair, and my apologies to the panel. I had to leave to manage a bill on the House floor dealing with a very exciting issue of LIBOR. I will not.
Thank you.
You're welcome. We're getting there, Madam Chair. But to my colleague from New York, I do want to point out that this isn't quite the same, but the same idea exists. Committee of Republicans released a CBDC, a central bank digital currency principles recently, and of those, we had said in this as one of those principles is we need to make sure that the private sector leads the way, but we need to ensure that the U.S. dollar remains the preeminent currency. And so that is a common goal, certainly, and we've been very aggressive in trying to lay that out. I've got a short amount of time. I'm going to try and go through as quickly as possible. And I'm going to peek around my colleague from West Virginia here, trying to get to Mr. Bankman-Fried real quickly. And again, I apologize. I'm not trying to replow ground that has already been gone over. But how many various levels and types of regulators do you currently engage with? Because I know you are worldwide. You've indicated that you have multiple regulators that you currently work with. I'm curious if you can even peg that number.
Yeah, so I mean, there are dozens, probably soon hundreds worldwide that we're engaging with, and you know that includes all across Europe, all across Asia, and then you know within the United States, we're engaging with state money transmitter, money service business licensure. We have a CFTC license for derivatives. We're engaging with the SEC, and you know I anticipate more agencies getting involved soon as well.
Well, yes, and I want to make sure that we are not over-regulating that. One, I'm sure it has cost you an untold amount of money so far, and I'm sure everyone that has been dealing with that. But I also want to make sure, and no offense to any of you, I want to make sure that there are others who are going to be able to enter that space, and that they are not being blocked out, and that there is an artificial a barrier to entry that is going to allow others to do, frankly, what you all did, which was be innovative and supply a product to people who are looking for that product. I'm going to have to move really quickly. I'm going to go to Mr. Brooks on a couple of things. Would you describe why establishing these clear rules of the road is important before we, an important step before we add additional regulation and consider that regulation?
Well, Mr. Huizenga, it's good to see you again. I think the most important reason of many is international competitiveness. So other countries make this easier. Okay, let me just make clear. Other companies make this easier, other countries. I just came yesterday from the Middle East, where in Dubai and Abu Dhabi, they have super clear derivatives regulations, super clear ETF regulation. They're trying to lure Americans over there to build these products, and they're moving there.
So how are they viewing these crypto assets differently than traditional assets? I mean, what Rubicon have they crossed that we haven't? And you know, why is it important to think about digital assets differently?
Well, I think one of the things that they've figured out is that crypto actually is less fundamentally different than equities and debt than you think it is. It's a risk-on asset that people want to invest in. They want to invest in it in Canada, so Canada builds a regime for it. They want to do it in Germany. We're the last country standing that hasn't figured that out. It's a risk-on asset that people want exposure to as part of asset diversification.
As opposed to traditional assets.
Correct.
Okay. I've got a minute left here. So, Ms. Haas, if you indicated in your testimony that, quote, every asset listed on Coinbase Platform is subject to rigorous legal, compliance, and security review, close quote. Could you provide us specific details on what Coinbase's process has been to be able to make that type of statement?
Thank you for the question. Yes, so specifically for the legal review, we assess each asset under the Howey Test, where we, as Brian Brooks spoke about earlier, through the Crypto Ratings Council have established a framework where we look at the risk factors and we determine whether or not it meets characteristics of the Howey Test. It's a risk-based assessment. It is not a black and white test. But based on our assessment, we believe it's lower risk that these are securities and before we list them on our platform. We separately do a compliance review. Our compliance review includes looking at the developers of the token, ensuring they're not on an OFAC sanctions list. We look at to make sure it's not a scam, that there's actual people using this coin, that it was developed in sound manners. And then we look at a security review to understand the underlying code to say, can we provide custody for this? Is this at heightened risk of an attack or someone pulling the value from these assets? So it's security, legal, and compliance before we list an asset.
Okay, and I'm hoping that the chair will grant me leave for my LIBOR work to just end with a closing statement as my time is up here. A number of you have brought up the unbanked and underbanked. And despite rhetoric that gets thrown around, all of us on this committee are very concerned about it. I happen to represent the second poorest county in the state of Michigan, which is in the top 100 poorest counties in the nation. And I understand what it means for these unbanked and underbanked folks to be involved in the process. What I want to make sure is what we do, not just here today, but in the future. We tend to be lag indicators at the government level and with regulators rather than on that front end. And I'm hoping that we do nothing to harm their opportunity to engage in the process. With that, I yield back.
Thank you very much, and thank you for LIBOR. The gentleman from Florida, Mr. Lawson, is now recognized for 5 minutes.
Thank you, Madam Chair, and Ranking Member Henry. This is a very extraordinary meeting, and I would like to, again, as everyone else, welcome all our people who are testifying today to this committee, which is very important. I'm not sure, probably it would take me a long time to understand what all we mean by cryptocurrency. And I just heard some testimony stating that how we lag behind all other countries in making changes. And this is to everyone. My colleagues, Representative Soto and myself and 8 other members of Congress, led a letter to leadership addressing the digital assets provisions that expand the definition of broker under Section 6045, param C1 of the Internal Revenue Code in 1986 to include any person who, for consideration, is responsible for the regular provision and service of effectively transfer of digital assets on behalf of another person. As drafted, the provision would include miners and other validated, as well as software and hardware wallet makers who do not engage in trading activities and are beyond the scope of broker services. What are your thoughts on this provision? Do you think this is a good tax policy to require non-brokers to report on transactions for people who are not even their customer? Why or why not? And this is to the whole committee.
Well, maybe I can jump in there, Congressman. It's Brian Brooks speaking here just for a moment. I've said many times that language would be sort of like requiring YouTube to get an FCC broadcast license because they're a person engaged in distributing television content. I think what we need to recognize is there's a difference between centralized exchanges. You have 2 of the biggest ones represented here who all agree that they should be engaged in tax reporting, and they do that, versus decentralized algorithms where there is no company involved in the transactions at all, and there's no one well situated to provide that kind of tax reporting. So that distinction is, I think, super clear. The technology has enabled people to transact peer-to-peer with no intermediary. So who is it that we're asking to do the tax reporting in that context?
Anyone else would like to speak on that?
Yeah, just one. This is Danelle Dixon from the Stellar Development Foundation. One of the issues that I think that is a problem with this is that it may seek to require these entities that actually don't have access to any personal information at all. Because as the validators, they're actually just validating the transaction and don't know who those individuals are that are on the other side of it. It might require them to gain access to that information, which is exactly what I think many of you and us do not want.
Anyone else before I go to the next question? Well, this question is for Ms. I hope I pronounce this right, Ms. Haas. Does Coinbase have multiple lines of business? Have multiple lines of business? How are each line of business segregated and ring-fenced from one another to a confidential information is not improperly used, where confidential information not improperly used?
Thank you for the question. Coinbase does have multiple products. In many cases, we consider our products a product family where we're serving one customer and the customer benefits by having those products within one application. So for example, we provide custodial services, which is, for all intents and purposes, a wallet where they can hold their crypto assets. But then integrated with that is the ability to trade out of that account. and then to settle new assets back into that account. So those are different products to be able to store versus be able to buy or sell, but they're integrated products. Those we have within one legal entity as an example. They are offered as one product family. That is different from when we offer products such as our Coinbase Cloud offering, where we're using our technology to allow others to build in the crypto economy. That data is 100% ring-fenced, not allowed through any of our other products, and we do segregate data. We have different engineers, we have different legal entities, and we provide a lot of protection. So it depends on the product that you're speaking about, Congressman, and some we share and some are very much ring-fenced.
Okay, real quick, another question. Do withdrawal fees apply to taking crypto off the platform? What fees apply? How are these fees calculated?
No, we do not charge any fees to withdraw crypto from our platform.
Okay, with that, Madam Chair, I yield back.
Thank you. The gentleman from Arkansas, Mr. Hill, is recognized for 5 minutes.
Thank you, Madam Chair. Appreciate this good, productive hearing and the good questions from both sides of the aisle, and appreciate the panel being here. Let me start with Mr. Brooks. You've had some good comments about the presidential working group on whether stable coins should be banks or not. But on the issue of the wallet, what should members of Congress be concerned about in sort of that regulatory umbrella of any individual's wallet? Do you anticipate really tens of thousands of wallet providers or hundreds? And I know in the working group, they suggested it too should be a bank, or I assume connected to a bank. So is that really necessary? And talk to me about wallets for our consumers to have access.
Yeah, well, Congressman Hill, thank you for that question. That is an important one. And I think, as I said earlier, the ability of people to self-custody their own assets and to send them directly without using an intermediary is at the core of what we're trying to build. So if we made it so that wallets had to be hosted by a bank or some other regulated institution, you know, we already have that. We already have banks, and that'll take time.
Hey, Ann, I'm in committee. How things going? I said, I'm in committee. How things are going?
Mr. Lawson? Please mute. You're unmuted. Please mute. Please mute. Mr. Lawson, please mute. Thank you.
Okay, so just to finish the thought.
Meanwhile, back at the ranch.
Exactly. So the ability to self-custody is really, really important. My point about the role of the banking system is simply that, again, to my point of parity, an asset that is, or a transaction that's allowed to be done inside of a bank shouldn't be technology specific. It should be technology agnostic. If you're engaged in payments or lending, you should be able to do that however. But wallets are critical. What's missing from this, which technologists are building today, are crypto native identification protocols that will allow us, without getting the name and the taxpayer ID number of the person on the other side, to know that it's a safe wallet, not a blocked wallet. And that is in development today by multiple
Yeah, I think
companies.
that's critical, because this, you know, we like the concept of not being spied upon by the actions in our wallet, and yet we all want to comply with the rules around AML, BSA, and so anonymously securing that the wallet is in compliance is sort of an important feature of it.
Absolutely.
Ms. Haas, community banks have been the backbone, of course, of our local markets and critical. And in September, it was announced that you partnered with Vast Bank, with your institution, to provide crypto banking services. So maybe others can comment, but let's start with you. For aiding a normal community bank customer out there in my district, or someone who wants to innovate in a bank and using crypto products, are we in a good position regulatorily, or are there changes we need to make?
I'm going to speak about two things. One, I'm going to talk about how they can do it, and separate, we can talk about the regulatory environment. So Coinbase has tools to allow any bank to be able to provide crypto to their customers, where we want to make our back-end services, our 9 years of experience of safely custodying crypto assets, of being able to integrate with blockchains, available to all global users. And one way we do this is by letting banks partner with us and white label our tooling so that they can offer this directly to their customers. there does need to be continued innovation and clarity on behalf of many banks about what is permissible activities for them. And banks that we partner with and speak about their ability to offer crypto to their end customers are working with their various state and federal regulators to gain clarity about what would be permissible for them to offer to their end consumers.
Thank you. This is a big deal because having spent almost 4 decades in and out of that business, banks are gun shy about their regulatory burden, as Mr. Brooks certainly knows. And being cleared for that IT exam or their new product review exam at their board level is really not something that bank boards want to be surprised about in this arena. Mr. Cascarla, on Paxos, you have a view on that, on partnering with banks?
Yes, as maybe some members know, we have a number of partnerships with banks, and they work with us today. I think we're an infrastructure provider, so for us, banks are an important customer set. I think that they're trying to upgrade their infrastructure to be able to adapt to this new technology. There's a recognition that the way the current financial system is working today is not really adapting to the 21st century needs of a digital economy. And so I think that there are important ways in which the current financial system can upgrade itself. Traditional assets can now move on blockchains, dollars, gold, securities. And it's not just about crypto, which, as exciting as it is only one piece of this broader transformation that's happening.
Thanks. What one regulatory issue would be important to you at that community bank level? And if you would, respond to me in writing. Thank you. I yield back.
Thank you. The gentleman from Illinois, Mr. Foster, who is also the chair of the Task Force on Artificial Intelligence, is now recognized for 5 minutes.
Thank you, Madam Chair, and to our witnesses. I'd like to focus on what I think is the crucial importance of having a secure digital identity for crypto asset transactions. First, regarding controlled anonymity for prevention of criminal activities, it seems to me that if we wish to prevent crypto assets from being used, for example, for ransomware or other criminal payments, that there is no logical alternative to having all crypto transactions associated with a legally traceable identity, someone who can be extradited if they do something criminal, and which these can be pseudonymous to market participants and to the public, but that must be capable of being de-anonymized pursuant to the action of a court in a trusted jurisdiction. Do any of you disagree with that conclusion, that this is a necessary condition for preventing, for example, ransomware? So let the record show that no one raised objection to that statement. So I think that's very significant. So we have to start planning for a system where in a court, in a suitable jurisdiction, can actually de-anonymize any legitimate crypto asset. Okay, and now that is relevant to crypto assets such as stable coins or CBDCs that have stable valuations but still could be used for criminal activities. But for crypto assets which are speculatively traded, then we also have an additional worry, which is abusive trading practices. In that case, we need to know not only the beneficial owner behind a trade, but there has to be a uniquely identified beneficial owner. There has to be a regulator that can see, oh, this is a wash trade because, even though they look like separate pseudonymous IDs, they are in fact the same person. And so that, historically in trading, that has required to have a regulator that can see the true beneficial owners. We spent a decade trying to get the beneficial owner onto the consolidated audit trail, which probably you're aware of. So do you think that is also a logically necessary condition to prevent wash trades and similar abuses? Mr. Bankman.
Yeah, I'll say I do think that it is, and we conduct know your customer diligence on all of our users so that we do know who the participants are. We're responsive to governmental inquiries about that. We're overseen by the CFTC on that with FTX US derivatives. I also think that this is a powerful argument in favor of having harmonized regulatory and market frameworks, in particular between different asset classes, where if you end up with a different regulatory framework for the market's regulation of Bitcoin derivatives, stablecoin derivatives, Ethereum derivatives, and other assets, you end up making it not just riskier and harder and more annoying for the user to access and more overhead for the industry, but you make it hard to have consistent regulatory oversight of a fractured regime.
No, I agree completely. Look, I have been lurking in the deep weeds for over a decade and trying to get this split inside Congress and between the SEC and CFTC. It just, this is not something anyone would have created, but have you had that discussion with, a number of you expressed enthusiasm for having a single unified national regulator. Have you run that past the Ag Committee? No, look, I know the answer to that. I mean, this is one of the original sins of Congress as it's constituted, and financial services have been suffering from it for a while. Now, in terms of tax payments, it seems to me that if there was simply the requirement for any digitally traded asset to be associated with a pseudonymized, basically a tax ID, that you have an API provided by the government that says, I want to give me a pseudonymous tax ID, and that be put publicly on the blockchain, then and that blockchain be listed with the tax authorities, that then the tax authorities could just run a piece of software and calculate how much tax everyone's owed. It seems like that's a very lightweight requirement, even on a startup in this business. Is there anything wrong with that concept?
Congressman Foster, I think you've raised a number of really critical issues here around identity and the importance of that for law enforcement and transparency and auditability. I think it's a critical area. I think there's some critical things that have to be balanced, of course. I think most of us would agree, I hope, that privacy, security, limiting the leakage of personal identifiable information and data breaches, these are real challenges. Blockchains provide a very powerful way to have assured data. They also provide auditability and transparency. And so there's actually a risk of, if you connect too much personal identifiable information to these, that could be abused.
Yeah.
And so
Well,
I think
the only personal identifier is it's pseudonymous. You can cryptographically inspect it, make sure it's valid, issued by whatever government you claim to be domiciled in has issued this, and then that's all you need to know.
So I would agree with that. I think really a critical next step for this industry are digital identity standards that allow, using cryptographic proofs, using crypto technology itself to prove that someone has been KYC'd, prove that someone has an
I agree, and this is we have legislation on that subject, and thank you, and I was, of
course,
yield back.
Thank you. The gentleman from Minnesota, Mr. Emmer, is now recognized for 5 minutes.
Thank you, Chairwoman Waters, and thanks to our witnesses for joining us today. Congress really needs to better understand the great opportunities that your businesses are bringing to this country. Mr. Bankman-Fried, I have several questions for you and would appreciate as much as you can quick answers so we can make the most of the time that we have. FTX US offers crypto commodity derivatives products such as futures and options contracts. To provide these products in the United States, it's my understanding that FTX US has obtained at least 4 licenses from the CFTC, which you listed in your testimony.
That's correct.
Do you know, are there any additional licenses separate from those 4 listed in your testimony that are required by the CFTC for FTX US derivatives to be fully compliant with US derivatives regulation?
I do not believe so.
I think that's correct. And where does the price discovery, sir, for your CFTC-regulated crypto commodity derivatives contracts primarily come from?
So there's a very large number of market participants that participate in those. There are hundreds of billions of dollars per day globally of volume in similar products. And like other markets, we don't choose that pricing. It's a market-based pricing that comes from a variety of liquidity buyers, market-making firms, individual users, and other people.
Right, and I mean, I'll note that for Bitcoin futures contracts that trade on the CME, which is a CFTC-regulated exchange, 100% of that pricing comes from 5 U.S. crypto spot exchanges: Bitstamp, Coinbase, Gemini, Itbit, and Kraken. We have seen disapproval letters from the SEC on multiple Bitcoin spot ETF applications. I don't know if you're aware of that. Chair Gensler's justification for not allowing Bitcoin spot ETFs to trade is his belief that Bitcoin spot markets are, quote, vulnerable to fraud and manipulation. Now, it's my understanding that FTX uses surveillance trade technology akin to the technology national securities exchanges use to protect investors and ensure sound spot markets. What does this technology and any other tools FTX uses to protect the spot market from fraud and manipulation look like?
Yeah, so, like other exchanges, we do have these technologies in addition to the, know your customer policies that we can identify individuals associated with trades. We have surveillance for unusual trading activity. We have manual inspections of anything that, gets flagged either by the automated surveillance or by manual inspection. And we do this with the trading activity, with the deposits, the withdrawals, and everything else.
Sounds like you're doing a lot to make sure there is no fraud or other manipulation. Thank you, Mr. Bankman-Fried.
Thank you.
Again, for helping us understand the extensive guardrails a cryptocurrency exchange like FTX has in place to ensure sound crypto spot markets for investors. The SEC has approved several Bitcoin futures ETFs that get 100% of their pricing from U.S. crypto spot markets. So I guess I'm left incredibly confused by how the SEC's concern over spot market vulnerability applies to Bitcoin spot ETFs when it doesn't apply to Bitcoin futures ETFs. And by the way, this is not a partisan issue. I've been working closely with Darren Soto on our blockchain caucus co-chair on this very issue. Why? Because the bottom line is that Americans deserve access to a wide, diverse range of investment products. They deserve to choose what investment vehicle they want to put their hard-earned money into. But the SEC is not providing Americans this choice when it comes to crypto commodity ETFs for reasons, again, that just don't make a lot of sense, especially after highlighting the extensive measures crypto exchanges take to protect their spot markets. Our strong crypto and Web3 markets have been in the United States, have been giving the United States up incredible capital market success. These markets are also teeing Americans up for incredible capital formation opportunities. But our regulators simply aren't capitalizing on the opportunity here, and it's my constituents and all of your constituents who are taking the hit because of this, and it must change. Again, I want to thank the witnesses for being here. I hope this is the first of many of these discussions we have as Congress tries to put together a thoughtful, light touch guide framework for the industry. Thank you. I yield back.
Thank you very much. We've been joined by Mr. Sherman from California, who's been on the floor working on his beloved bill on LIBOR. And I understand it's been put up for a vote, and we're all looking forward to voting for this bipartisan legislation. So this gentleman from California, who is also the chair of the Subcommittee on Investor Protection, Entrepreneurship, and Capital Markets, is now recognized for 5 minutes.
Crypto is many different things. Cryptocurrency is an incredibly volatile investment that aspires to be a currency that might displace or at least compete with the dollar. A stable coin aspires to be incredibly stable and is tied to the dollar. What they share is a culture, a vibe, a stick-it-to-the-man moniker, a belief that somehow this is new and hip and an attack on the powers of society. But the fact is that the advocates of crypto represent the powers in our society. The powers in our society on Wall Street and in Washington have spent millions and are trying to make billions or trillions in the crypto world. These include Goldman Sachs, JP Morgan, Visa, BlackRock, Citadel, Musk, and Zuckerberg, not to mention the CEOs that are before us here today. Everyone before us today is a crypto advocate. We will at some point hear from the crypto critics. We won't hear from CEOs. We'll hear from academics with their pencils and pens. Today, we hear from the CEOs with their lobbyists, their PACs, and their power. And we wonder why we won't be able to protect investors. The regulators need to listen to this hearing very carefully. With all the money and power on one side, we will not be able to pass meaningful legislation. Don't cop out and say, well, you're not going to do anything until we pass meaningful legislation. And if you wonder about where the power is, Zuckerberg had to come here himself and sit there. Brian Armstrong sent his number 2. And Tether doesn't bother to show up at all. Zuckerberg did not have a day in the park. He did not enjoy it, but he had to come. Armstrong didn't, and Tether ain't here at all. Now, the number one threat to cryptocurrency is crypto. Bitcoin could be displaced by Ether, which could be displaced by Dodge, which could be displaced by Hamster Coin. And then there's Cobra Coin. And what could Mongoose Coin do to crypto coin? In the area of fiat currency, the dollar will always be more important than the Uruguayan peso, and the Uruguayan peso is not a joke. There will always be an Uruguay, and the Uruguayan peso will always have some value. Will Mongoose Coin always have a value? I don't know. I just made it up. It's a joke. Although I said that about Hamster Coin, and then I found out there really was a Hamster Coin. It's not fair to compare fiat currency's current system to what cryptocurrencies aspire to be. It is true. You try to use a credit card or debit card to buy a sandwich today, the system takes 1%, 0.5%, 50 cents away from the merchant. You try to use crypto to buy a sandwich today, I don't know where you can go in Washington to use a Bitcoin to buy a sandwich. Can't be done at all. But someday. So we compare to what we hope crypto can do to the problems that we face with fiat currencies now. That's not a fair comparison. Now, looking at Ms. Haas from Coinbase, if I take $100 on your exchange, buy some Bitcoin, and then a couple days later, say Bitcoin happens to be selling at the exact same price, I sell it. It's my understanding that I get $94.02 back. Am I wrong?
We have multiple products, and it would depend.
Yes or no? Would I get, in that exact transaction, $94.02 back? Am I wrong?
I can't answer the question. It depends on the product.
Okay. Are there products where I'd be right?
There is a product where you'd be right.
Okay, so I could lose $6 in 2 days. What about Tether? Buy $100 worth of Tether, 2 days later, sell $100 worth of Tether, or sell the Tether. Could I lose $6?
Yes.
Okay. Let's turn to Mr.
4.
What?
It's a 2% charge.
A 2% charge. I thought it would be a 3% charge. It's $2.99 last time I was on your site.
No.
Okay. I'm looking at Coinbase fee, $2.99 on USTD. We'll put this in the record. In any case, to lose even 2%, let alone 3%, and then another 2 or 3% on the way out in scarcely a couple of days, that's well over 1,000% interest lost in that period of time. Mr. Allaire, is your reserves all in instruments that yield less than 0.1%?
That is correct.
Then how do you pay 1% interest on some deposits?
We don't pay interest on deposits.
And yet you have a deal with, oh, my time has expired.
Thank you very much. The gentleman from Georgia, Mr. Laudermilk, is recognized for 5 minutes.
Well, thank you, Madam Chair, and thank you for having this hearing. I think it's very